Hey everybody, Economic Ninja here. I hope you are doing great. We're going to talk about a headline that I just saw. Actually, I saw it this last weekend. I was going to do a video about it, but I don't want to stir the FUD too much, right? And it's out of Forbes, and it's entitled "Stock Market Investors Ready to Panic Next Week." And I'm gonna link the story below, and I'm not going to actually talk about the article itself. We're just going to talk about the headline, okay? Because I've talked to you guys before about how important it is to control your emotions, right? During both bull runs and bear falls, right? Crashes, bear markets, there is tons of emotions on either side, all right? It's not until really, it's very rare that there's not a lot of emotions. There's always ups and downs, right? You have your traders on one side of stocks, bonds, homes, real estate, things like that. And then you have your holders, your investors, your long-term people. And out of those, both segments have in them very wealthy people and people that are just either starting or just can't seem to catch a break, let's say, right? Well, I've talked about the importance of controlling your emotions, and that is the difference between the people that can't catch a break or are always losing. You seem to, everything you put your money in goes down. That is the difference between controlling your emotions. You can't control your emotions there. And the wealthy people that can control their emotions and they think farther out, right? And the only reason they can think farther out is because they can look back into history farther. The farther you reach back into history, the longer you can go tell the future. And the reason why is because nothing is new under the sun. Every day we have the same cycles, every year the same cycles, even these weather cycles where you talk about global warming. I hate to break it to you. Those are massive 400-year cycles. So it seems like global warming, guess what? We're going into a deep freeze cycle, and that's going to take a long time to be able to see, right? The scientists are finally figuring out, oh, based on the data, things are getting hotter. Get ready, it's about to get cooler. And actually, just so you know, a deep freeze cycle is technically only average temperatures around the world going down by, I think, 14 degrees. So at its max, okay? But it changes the jet stream. Sorry, I digress. I'm not talking about weather, but I'm trying to give you an example. So when we control our emotions is when we can have peace, right? Because everybody buys an investment. The day they bought it because they believe it was going to go up, right? Whether it's just and hopefully it's not, just a hot tip from your dentist or your barber, that's not the kind of information you want. Or if it's done by due diligence, really thoughtful research, really asking around, getting to know that investment vehicle, right? Whether it be, again, real estate, stocks, bonds, any of that stuff. The day you bought it for a reason, right? And hopefully it was a good reason. It was reason based on intellectual, you actually thought about it, right? You actually did some research. All right, with people that lose and we're gonna get to this headline, they always lose in their investments. 9 times out of 10, if they wouldn't have sold, that investment would have came back up. All right, 9 times out of 10. That is true. It is true with me. Out of 25 years of being an investor in many things, everything that I lost on, I look back and there was only a few things where the company actually went bankrupt and closed. And it was a grim reality for me. It wasn't until I started investing in cryptocurrencies where I really got a hold of my emotions, because man, those were wild swings on a percentage basis. Now look at this story out of Forbes. You know, essentially hit the panic button, everything's going to crap, investors are going to be selling. Now, there's a lot of truth behind that because we know that the market is coming off of one of the worst months since 2008. As a matter of fact, you're seeing all kinds of headlines that are just blowing your mind, I'm sure, like inflation not seen this high in 30 years. Real estate, never seen these numbers in 15 years. Stock market's crashing, never seen numbers since 2008. I've even seen some 2000 numbers from the dot-com bust coming out now. So people are being barraged with bad information or bad news, right? Which accelerates that need to sell and liquidate, which exacerbates, see, I got it right that time, the problem, okay? Now, I'm not saying don't go out and sell your stocks if you don't think the stock market's selling. This video is not financial advice. I'm not a financial professional. And if you think I'm a financial professional because I'm drinking an awesome high-end McDonald's coffee, it was like $1.09. Well, then you're confused. I'm not one of those guys. Point being is this. We are going to see the market start to turn and really shift, and the Fed is going to have to shift with it because market sentiment is getting crappy. But it's good for people like us that are sitting on the sidelines waiting for deals, right? If you don't have a cash position right now, then I don't say go sell something, you know, erratically and have a cash position, but you should be slowly building up a cash position because cash is waiting on the sidelines. Billionaires, people worth tens of millions of dollars, they have cash sitting on the side and they're invested. And then when one of their great investments tanks, they go, what? It tanked because an algorithm or a bunch of idiots over there that don't know what they're doing is sold? All right, I'll go buy some more. The point being is that you need to have that cash position ready for the craziness. And you have to be hedged for inflation. So gold, silver, what's it called? Real estate, good real estate, right? That hedges you. Okay, cool. But you don't go all in on something. You still want that cash position because if you are wrong on your timing, you could be right on the investment, but wrong on the timing, right? And we're looking at the big picture here. Governments all around the world are printing money like crazy. There's wars and rumors of wars, right? There's even more rumors of wars with the China-Taiwan thing. That'll send markets reeling. Supply chains crashing. We've got inflation narratives, all that kind of stuff. If you don't have that money setting off to the side, I think you're going to catch yourself into a world of hurt, okay? So again, I'm going to link this story in the description, but I want you to go through and think about where the authors are guiding these things. What are the motives of a lot of authors too? You know, are some people being paid by hedge funds? Yeah, it could be. Maybe there's some short sellers out there. There's a lot of truth behind big short sellers that go out and try and really rattle markets, you know? And do I think that the markets are gonna fall? Yes, I do. But I think they're actually gonna climb here in the near term when I'm saying like within the next 5 months, because the Fed is going to have to pivot because of all of this market sentiment that's down in the dumps. So I hope you guys got something out of this, guys. Keep your emotions under control. That is the most important part. And the easiest way to do that financially is be well diversified. Don't worry about losing $1 over here or 10,000 bucks over here, depending on your net worth. If you're looking at the big picture and you have your cash position, you go, oh, I can actually buy at a discount. That is what is going to separate you from a speculator and an investor. All right, guys, that being said, thank you so much for watching. Economic Ninja is out.